Welcome back. You're watching Your World at 10. Now, we have an interesting M&A situation on hand. Last week, multiplex chain INOX bought out the promoter family, that is the Shroff family's 43.28% stake in Fame India. That's a competing multiplex business. Now, that stake changed hands at roughly 44 rupees a share. The next day, INOX bought a 7.21% stake from the market at 50 rupees a share. And now INOX has announced the mandatory 20% open offer for Fame's shareholders at 51 rupees a share. It all seemed pretty standard till Cnbc TV 18 reported last week that the ADAG group was also interested in buying Fame India. Remember, it has the largest multiplex sort of chain in the country and had in fact made an offer. Today news broke that the ADAG group had reportedly offered Fame's promoter family 80 rupees a share. That's almost twice what INOX did the deal at. The ADAG group has now raised issues regarding minority protection. But how valid are any of those, or is it just a case of sour grapes? And will SEBI have any reason to step in, as sources at the ADAG group seem to be indicating? Well, joining me tonight to discuss this, SHUVA MANDAL of ABIZER and ABIZER DIWANJI of KPMG. SHUVA, what do you think? Does the ADAG group have any case at all? It did offer more, but unfortunately, Fame's promoters chose to sell to INOX. That's perfectly fine, isn't it?
No, I think let's understand what the ADAG claim is. I think what ADAG is saying is we recognize we made a higher bid at 80, which is what they say they have done, and the bid has been effected at 51 rupees approximately. They also recognize, from what it appears in the media, that a private seller is free to sell it to any person of its choice. They have a limited point. The limited point they have is when an open offer gets triggered in a mandatory public announcement situation, do the public shareholders have a right to get a short exit at the highest price? I think that's where I think there are two norms here. One is what is the statutory law, and the other is what the law could be from a governance perspective. As far as the statutory law is concerned, it's very clear that you only get the best price the exiting seller is getting as the promoter. So to that effect, the INOX offer at 51 approx is absolutely fine. So ADAG's story is that no, there was a better price, which you may not have chosen as the selling promoter, but the minority was entitled to. And therefore, you're denying the minority of a better price. Now, there comes the issue that when a seller or a controlling promoter is selling his stake, are there any fiduciary duties involved when he sells his stake? Because if the answer to that is yes, then the corporate governance debate starts. That when a promoter is exiting, is he under an obligation to offer his minority shareholders the best offer price?
What do you think, SHUVA?
That is not what the statutory law is.
What do you think, SHUVA?
Well, I think clearly, I think if you ask me my personal view here, I think when a promoter is selling, it is complete freedom on his part to decide to sell which way he wants to sell. And for that, you don't need to say that, okay, the minority expects 200 rupees, so I need to make sure I do a deal at 200 rupees. So clearly, I think at some level, you need to give promoters their space, the bandwidth for them to operate on their own. There are just too many governance provisions dealing them. I agree. If the governance rules are saying the promoters need to conduct themselves in a particular way when managing the affairs of the company, point taken. And that is where the rules should step in. But if you're telling now there are governance rules as in the mode of the exit, the manner of the exit, and the person to whom you're exiting, and therefore the price, I think we're getting into a different territory of corporate governance here.
ABIZER, what's your take on this? Right, earlier in the day we had Sandeep Parekh on, who said that logically ADAG is on a strong wicket, or has a good point, but legally on a very weak wicket. Do you think there's any case at all? I mean, ADAG sources have been going around talking to media saying, we think SEBI should step in. Do you think there's any case for SEBI to step in at all?
If you look at this transaction, the way I look at it, and as SHUVA kind of explained the legal points,
right.
What I would like to say is, as a simple person, there is a willing buyer and there's a willing seller. As long as the willing seller is willing to sell to the willing buyer and the willing buyer is willing to buy it, and it's near the market price in case of a listed company, there is no issue. Benchmarking with the past price at which it was offered is a great indicator, and it could well be an incorrect decision at that point in time, but one can't really hold on to it. I mean, somebody could argue that Temasek put in money in Citibank at $30 and the stock turned out to be $5 after the end of the day. it doesn't mean that the shareholders have lost at some stage. What it really means is, at the end of the day, there was a decision that did not get taken at the promoter level. At that point in time, I presume it was an offer made to the promoters, and the promoters did not take it. Here came an offer which the promoters liked, the market conditions of what they are today, and the promoter did the transaction. And in line with the regulations, the buyer has done an open offer. Beyond that, I think, even from a corporate governance perspective, I don't see too much of a case here.
Yeah, but let me add that.
Sure, go ahead.
I mean, let me just play the devil's advocate and try to see the position that I think where SEBI has a role to play. I think the role SEBI has to play on this is to really determine that if indeed there has been a higher offer at 80 as ADAG claims, what was the driving force that led to someone to sell to someone at 51? Now, there could be commercial reasons, and I think one needs to see whether the offer price of 15 is indeed the real genuine offer price. That is where the SEBI investigative role comes in, because what really needs to be made sure that when a promoter exits, the minority gets the best price. So I think that is the investigation, or that is the examination that SEBI needs to do.
All right, gentlemen, let me also play devil's advocate for a bit. Now, let me turn this around a bit to say that, if two competing offers had in fact gone to a board-driven company, then the board, even if it believed that the lower offer was a better offer, let's say in terms of synergies or other conditions, that came along with the offer, would at least be obliged to inform the shareholders that there is a higher offer. So my only question here is, I understand that the promoter is an individual shareholder also and is allowed to sell his shares or her shares to whoever he wants. But since in India, promoters run companies, they dominate boards, do you think at all, Shiva, to go back to the point that you made in your first answer, the promoter would have at least needed to disclose to the shareholders that, hey, listen, we got a higher offer, but these are the XYZ reasons why we're disregarding the higher offer, and we'd prefer to go with the lower offer. Maybe it was a matter of time or other conditionalities that helped them choose the lower offer.
Okay, so I think, Menika, you raised the troubled question that we often face in M&A situations in India, which is, when a promoter is choosing to sell his property, which are his controlling stake in a listed company, is he selling that in his personal capacity, or is he selling that in some form as a member of the board of the target company?
Right.
Now, it could be the same individual, could be wearing two hats. There could be situation one where I could be owning the stake and I'm free to do what I want with it. And there are no principles of corporate governance that apply there. And this is where corporate governance comes in, is by virtue of being a director also and a controlling owner of a controlling stake, are you therefore obliged to conduct yourself in a particular manner,
right,
so that the minority shareholders get the best possible price? Yes, I think what the promoters as directors of the company are obliged to answer to the shareholders is to explain why they thought INOX is a better fit than a bid from ADAG. That's a valid explanation. But as regards the price, has the company taken a hit? Because remember, the fiduciary duty, the governance issues, which a promoter director on the board of a listed company has, is to the company, not to the shareholders.
Right.
And what judicial precedents have said is that the shareholders get the derivative benefit by being members of the company, but they don't have a direct privity with the promoter director. So there's a distinction. The arrow goes into the company and then it goes to the shareholders. So I think here we will have to draw a new jurisprudence, and I'm not saying that's not prevalent in the West. It may be prevalent in the West, where if you're a member of the board, irrespective of in which capacity you're selling, you owe a fiduciary duty to the shareholders. But that's an evolving, jurisprudence in which I think, I think it's a larger issue which ABIZER will also may want to comment. Is, are we in that stage of economic cycle where we are willing to accept the European and the US levels of governance? I mean, we have to realize there is a certain growth stage to every development of the business cycle.
ABIZER, your final word on this. A couple of different questions rolled into one, but you'll have to make your answer really quick. Do you think it's likely that SEBI will at least ask a few questions of this deal? And B, if you were the lawyer on behalf of FAME fighting why you picked a lower offer versus a higher offer, would you be able to fight the governance battle successfully in this?
Well, short answer is, should SEBI do a detailed investigation? I don't think so.
Okay.
If I were a FAME promoter, how would I look at it? I would well say that there are two different offers coming at two different points in time. I don't need to go back and justify the earlier offer. It came at a time when it came. If it has come formally into the board, I am obliged to disclose that to the board for the company. If it's come for the company, for a majority stake in the company, it's my duty to go and disclose it to the board, and the board in its right fiduciary capacity will take the right decision. But if it's come only to the promoters, maybe a personal matter, I may not necessarily want to disclose it to everybody, and I don't think it was disclosed when it ever happened, if at all it did happen, because we do not know. So I would not really go back and justify an earlier price, because frankly they may not be, the market situations are different, everything is different. I don't think I need to go back and justify at any point. What I think one needs to do is, if the offer was formally communicated, it ought to have been discussed at the board and then decided upon. If it was not formally communicated, there is no question. The offer that got formally communicated, got formally accepted, and the due process of law has been followed.
All right, SHUVA, a one-word answer. Do you think SEBI will step in to ask any questions?
I think SEBI will look into it. I'm not sure that they will step in. There's a fine line between looking into something and stepping into it. The public need not always know that SEBI is stepping into an action mode. Well, they are there. I think we got to give them the benefit of doubt. They know their job pretty well, and they always do the job pretty well.
All right, gentlemen, I'll leave it there. Thank you very much. An interesting M&A situation, like I said. SHUVA, MANDAL and ABIZER DIWANJI joining in on that debate. It's time for a quick break on Your World at 10. We'll come back with all the day's national and political news headlines with Veer Raghav. Veer.
Right, a massive avalanche kills 17 army men, injures another 17. Rescue operations has now been called off. That and more after a very short break.